Good afternoon, traders. This is a live trade recap. I took 2 trades this morning right at the market open, coming away with a 50% win rate, which you probably think means that I'm break even, but no, I trade all or nothing 2R. That means that all of my winners, I win 2 times my risk. So I'm actually green today, and the reason why the trading P&L for today looks red, let me show you that I do have it set to August 4th, 2021, which is today, looks red because my swing trade with SPXL is pulling back at the moment. But you could see the 2 trades here that I took, EXPI and AMC, and I am up on that EXPI trade, much more than we lost on the AMC trade. So let's take a look at the screener first, and then I'll show you, if you don't understand how all of that all or nothing 2R risk management works, I did release a video yesterday called Reward to Risk Ratio versus High Win Rate. Check that out. It really explains it in a lot of detail with real scenarios and shows you how the risk to reward ratio plays out over the long term, which is what really matters. So let's take a look at the screener first, and we can see how I pick my stocks. So I go up to my screeners, select my mid cap stock, click those 3 dots, click modify, otherwise your filters will not be applied. Then I click on volume to organize the list by volume from high to low. So at the open this morning, AMC was up there, but it was green. Now it's red. TAL was up there, but it was below the 200 MA on the daily chart. So you'll see me put it up there, I believe, but take it off pretty quickly. And then most of these other stocks were not here. Under Armour was there. So let's take a look at the video, and you'll see what I actually put on my charts page. So here's AMC. This is just 1 minute after the open, so I'm just now kind of checking the stocks and seeing what looks good, what may give me an opportunity. So AMC is above the 200 MA. You could see this curved red line. That's the 200 MA. We're on the daily chart. Same thing with Under Armour. It's above the 200 MA. And the reason why I like to see the stocks trading above the 200 MA is because that tells me that they're in a long-term uptrend. So I'm trading with the trend. All right, so now on Under Armour, I'm marking out the previous day high or previous session high. Doesn't matter if it was yesterday or the pre-market from today or the after hours from yesterday. Whichever of those 3 is highest, that's what this gold line represents. And the price must be trading above that line in order for me to look for a trade. Excuse me. Now, AMC was trading above its previous day high, but I did not mark the previous session high on the chart. It did break out over it just by a few cents actually, but it did trigger an entry, and I'll show you that. Now here's EXPI, and then also this is extremely important on Under Armour. You can see that I put a red line here. That's where I determine the ABCD pattern to fail, and that's based off of where it begins. So you could see the market open, the low of the pattern is right here, and then the high is up here. So this is kind of a weird, it's not a textbook ABCD pattern, but again, you have to remember that if you look at this on an even smaller time frame, this is on the 1 minute chart. Let's say we were looking at this on the 10-second chart. Instead of seeing one giant green bar here, you would see a ramp of green bars on the way up, and then obviously we have a ramp of red bars on the way down. So it actually would look similar to this on a 10-second chart. So it's still an ABCD pattern, and this is point A, this is point B, and then C. If C breaks down below point A, then I cannot take a trade. And I don't think it does it on this candle, but it does do it eventually. So EXPI is kind of almost giving the same pattern that Under Armour did at the very beginning. Okay, so let's go back to where I entered on AMC. So as I said before, it did break out through its previous high. It's somewhere up here. I put a chart on it, or put a line on the chart after the fact. I can show you that now, but it's going to kind of give away what happened with AMC. So here's where the previous day high is, 35.21, and it just barely broke out over that. So that did trigger an entry for me. Let's get back to the video. So once that happens, once the previous day high is broken, after the first pullback, I get in on a 1 minute candle that makes a new high. So I'm hovering over this candle. The high is 34.57. As soon as I see 34.58, which you can see right now, so I'm probably going to trigger my hotkeys immediately as I press play. Not quite immediately. Nope. I was probably looking at Under Armour at that point or something. So there's a little bit of a delay there, but I pretty much got the fill that I wanted. This is a 3-cent slippage, which is nothing on a $34 stock. Again, the most important thing once you've entered the stock, once you've entered the trade, is to move your stop up to the appropriate level. For me, that's below, normally it's below the low of the previous candle. I decided in this case to move it to the low of this candle here. Either way, the trade would have failed. It didn't make a whole lot of difference on the trade. There wasn't a big difference between these two candles, so that part is a little bit discretionary. But the main thing is to get your stop loss in place. Let me back this up a little bit because we missed the next entry. But the main thing is to get the stop loss in place quickly, because you never know, your entry may get triggered and then the stock reverses. It's a fake out and you get flushed out very quickly. So you want to minimize your losses as much as possible. That's why the most important thing is to get your stop loss in place very quickly. So before I could even hit my profit target or get my profit target in place on AMC, EXPI did trigger an entry. And this one was a little more cut and dry as far as like where to place my stop loss. And I'll explain that in just a second. I know everyone has trouble figuring out where to place your stop loss. And I'll talk about that in just a second. But so here, the tops of these candles are pretty much all of the same price. I believe 43.24 or something. And so I need to see that level broken in order to get triggered to take an entry. And I think it happens while I'm adjusting my stop here. Something there, it goes 43.48. So that triggered my entry. I was still messing around with AMC. By the time I get back to looking at EXPI, then I realized I was just triggered. And I think, so right here, yeah. Let me just back it up a little bit. So that's where I figured out I was triggered. I hover over this candle and I just missed it. And I could see that the high broke over the previous high. Let's see if I can catch it real quick. All right, so either way, obviously this candle broke out over this previous high. I got in as soon as I could, as soon as I saw the price was near my desired entry, which my ideal entry was 43.44. So I pretty much nailed it, got in 2 cents lower, which isn't always a good thing because that's only good if the trade fails. If it works out, then you're leaving a little bit of money on the table. But again, nothing I can do about that. I tried to give myself the best chance of getting my ideal entry. And I got 2 cent slippage on the way down. So it is what it is. Now, this is where I want to talk about the stop loss. Whenever I see the tops of the candles all at the same level, so this ends up being a consolidation area instead of, say, a pullback, and then, you know, it's heading back up in a trend. Instead of a trend, this is a consolidation. The only difference is obviously there's higher lows, but the highs of these candles are all at the same level. So whenever that happens, I move my stop loss up to the low of that consolidation area, not the low of the previous candle. And that's because generally what happens in consolidation is the candles get tighter and tighter or smaller and smaller, and your trade will be almost meaningless if you put it at the low of the previous candle, because they can get pretty tight before they break out, and you're really not getting the most out of the trade in that case if you put your stop loss at the low of the previous candle, because remember, where you put your stop loss affects where your profit target is. So it makes more sense, in my experience, to place the stop loss at the low of the consolidation. It keeps you from getting stopped out if there's a little bit more kind of sideways movement before this breaks out. And again, if it breaks down, you're still protected. And if it breaks out, you're able to take advantage of the opportunity. And we'll see that play out here in just a second. So right now I'm moving my stop loss up to the low of this candle here, because that's the bottom of the consolidation area. You can kind of see a wedge here. And actually, look, if I would have put my stop loss, well, maybe, I guess I entered on this candle. If I would have put my stop loss here, it's getting very close to being stopped out on this candle. And it may have if I would have done that. Okay, so here I'm using my 2-hour calculator. You can download this from my trading group, which is on Facebook by the same name, Trading Armor. And this 2-hour calculator comes in handy. You just put in your entry, your stop loss, which is determined by the chart, right? You get all of this stuff right from the chart. You don't have to think about anything. For example, on this AMC trade, it tells me that I'm at 34.61, so I just punch in that number there. I figure out where my stop loss is going to be based on the chart. I put that number here, I hit enter, and it spits out my profit target, and it gives it to me at 2 times my risk. So 35.55. Here it tells me I'm risking 47 cents. So if this trade worked out, I would have made 94 cents per share on this this trade. So that's how the 2-hour calculator works. And once I get that number, I just left click on the little bubble and drag the 2-hour profit target in place. And now the trade is taken care of. I don't have to worry about it at all. I can walk away and everything's all set. And then, of course, I do the same thing on EXPI. So those trades are all set. And then I just decide at that point to minimize the number of charts on my screen to just the ones that I'm trading. And also, obviously, I have the SPY up here, which allows me to keep an eye on the S&P 500 and the NASDAQ to see what the market is doing overall. And then look at what's going on here with EXPI. I thought that first breakout was going to be the time where, it shot up, but I was wrong on that. But I don't judge my trades once I enter them. I just stick to the plan. So if I was maybe very judgmental about my trades and trying to figure out, is this a good trade or not? I might have stopped out, on this red candle and said, let me just get out of this thing because it's not doing what I want it to do. And I wanted to see it pop right away, but it didn't do it. So let me get out and take a small loss. No, that's not how I trade. Once I enter the trade, I leave my stop loss in place. I leave my 2-hour target in place and I don't touch it. I just let the trade play out. So let's fast forward here a little bit. Okay, so there's where AMC got me stopped out. Now, one thing I did decide, so there is a slight bit of subjectivity into my trading, and I've talked about that in a couple of previous videos, where once you've proven that you can trade purely objectively, systematically, like a robot, then I think you can start to work in a little bit of subjectivity. And what I mean by that is, so at the beginning of the market open, I couldn't decide which entry or which trade that I liked better, the AMC trade or EXPI. So I decided to place a trade on both of them. I can only take 3 trades per day. So I've already used my first 2 trades. Now I have to decide if one of them fails, which one am I going to reserve that 3rd trade for? I have data showing that my 3rd trade is almost 1.5 times more likely to work out than my first trade. So the 3rd trade's a pretty special trade. You don't want to just waste it on anything. So I have to make a subjective decision. Which ticker symbol do I think, based on all of my experience and all of my data, my actual data statistics, which one do I think is more likely to give me a win on the 3rd trade, assuming that my first 2 trades fail? So whether I'm right or wrong on that, I just have to make a choice and stick with it and assume that I'm giving myself an edge based on all of my experience and all of my data that I've collected over time. So my choice was EXPI. Luckily, I didn't have to use my 3rd trade. We'll see how things worked out. But you can see here on AMC that this trade failed, and I had already decided before it failed that I was not going to re-enter on it because I was going to reserve my 3rd trade for EXPI just in case it failed. So this is where you're going to see me put EXPI in this chart so you know what I'm saying is true, because otherwise I would have left this up and I would have looked for the next entry. So I put EXPI in the chart here, and then I put SPXL, which is my swing trade, on the chart below. So let's fast forward a little bit. So I'm all done with AMC. I gave it one chance. It didn't work out, and I decided to reserve my 3rd trade for EXPI just in case I need it. And you can see that it looks like I might need it at this point. Again, don't judge your trades. You picked this trade for a reason, and you should just keep your stop loss and your profit target in place according to your plan. And if the trade doesn't work out, it doesn't work out. And maybe your plan allows you to take another trade, maybe it doesn't, I don't know. But the main thing is, you're not going to know if your plan or your strategy works unless you actually follow it through and see it through for the entire trade. I can't change my plan once I'm in the trade. So now you see what's happening. This thing's starting to pop again. And the other issue that a lot of new traders, including myself back in the day, what I would do is I'd say, wow, this thing came back down near my position. I almost got stopped out, and now it's taken off. Maybe I should just pull my target down and take 1R or whatever I can. That's not going to work in the long term. I did that for a very long time, for over 100 trades for sure, hundreds of trades probably, where I traded like that. And in the long run, I was always red. Even though my win rate was pretty high, I was winning a lot more trades then, but I was always red. Again, watch that video about risk to reward ratio versus win rate, and you'll see why that is. So again, nothing for me to do. I just sit here and, or not sit here and watch the charts. I did get up once I had these trades placed and, went and got coffee and did stuff like that because I don't have to worry about these trades because I have the bracket orders in place. But I'm just letting this thing play out in real time because I want you to kind of imagine yourself in the trade and you're seeing this price action just kind of oscillate below your target. And of course, it's tempting to want to pull down that target and let me just get 1.7R or something like that. You're going to screw up your data big time, especially in the long run if you do that. So what I'm tracking right now is how well all or nothing 2R trading works with mid caps. So if I don't trade all or nothing 2R, then the results from these trades are absolutely meaningless and they can't even go on my spreadsheet. But I don't do that. I just stick to the plan. I trade all or nothing 2R, and you can see that my profit target was hit. This thing even went a little bit higher after that. So that's it. So anyway, those were the two trades from this morning. I think let's go over the spreadsheet really quickly so you can see those trades here on my spreadsheet down here at the bottom. So here's today, August 4th. And so there's the AMC trade, and we actually made quite a bit more. Again, this is not about making money. I'm just trading one share to test, to collect data on. And then here's our EXP trade, but I believe we made, even just trading one share, we made $1.84 on EXP, and we only lost 51 cents on AMC, so we made more than 2-to-1 on the P&L. Again, it doesn't really matter. The only reason I'm collecting P&L data at all right now is just to show you the cost of test trading. So especially versus a trading course. Trading courses, even the cheaper ones, are hundreds of dollars. The more expensive ones are thousands of dollars. And I bet you they don't tell you to do any of this stuff. They tell you basically to track your trades, to journal your trades. What does that mean? So here I'm showing you in detail what all of that means, and I'm doing it myself. And it's only cost me 64 cents so far. Sometimes this turns green and I'm actually making money off of this test trading. So and that may still happen. We're 58 trades in, so we're almost 60% of the way done with this test trading. So we're getting there. And the win rate, the average win rate of all my trade days is about 51%. But the more important number is this one right here, which tells me how many trades I've won out of all the trades that I've taken. And that's at about 41%. And again, if you watch that video that I made yesterday, you're going to see how strong that win rate actually is. Even though our break even is 33.3%, that sounds pretty close to that break even rate. If we could just maintain a 40% win rate after 100 trades, we would be up 20 times our risk. After 1,000 trades, we'd be up 200 times our risk. And we're doing even better than that. If I remove the trades taken in error, the win rate's even higher, 47%. The average of those two numbers is 44%. Notice how these numbers are starting to get closer together. That's showing you that everything is kind of settling down in this trading plan and my trading myself, that all of the changes that I made along the way are kind of taking effect because these numbers are getting closer together. I've always said that what's more likely to happen in the future is that my win rate will get closer to this number, and that's what's happening. The win rate after 3 trades only, so in the beginning I was taking more than 3 trades, but if I remove those, the win rate's even higher than our actual at 45%. And then this is really interesting and really important to notice and realize what's going on here. The win rate of the first trade is 40%. The second trade is 47%. The third trade is 55%. So what's happening there is really a couple of things. If I stay with the same ticker symbol, my second and third trade are more likely to work out. I have the data for that. I'm not going to go over that in this video, but I've gone over it before. And the other thing is, so here's the thing is that 40%, again, it looks low. It looks like, wow, your first trade is going to be costing you money, but actually we're up 4 times our risk on that first trade. The second trade, we're up 9 times our risk. And the third trade, which has the highest win rate, is up 6 times the risk. If it has a higher win rate, why is it only up 6 times the risk? Again, watch that video and you'll understand why. But basically, it's because we haven't taken that many third trades yet. So that extra win rate hasn't kicked in. It takes more trades for it to really show itself. And you could see the second trade, we've taken a lot more trades. So that's why the win rate is much higher. It's 9. Well, no, the win rate is not much higher. The risk to reward is much higher. We're up 9 times our risk on that. All right, so the only other stuff that I want to go through here, I didn't update these numbers here. I forgot to do that, but I did update where we are overall. We're up 14 times our risk, and we would be up 19 times our risk if we were only taking 3 trades since the open. You can see that I didn't update, and the total number of trades is 58, not 55. So I have to update those numbers within, but I went ahead and just did those in my head. So anyway, hopefully this video was helpful to you. If you have any questions about this trading plan or my trade tracking spreadsheet or anything like that, this can also be downloaded from my Facebook trading group by the same name, Trading Armor. You can get this, you can get the 2-hour calculator, you can get my plan, all that kind of stuff is up there for you to download and work off of, not to do the same thing as me, but to give yourself a model of maybe how you can develop your own trading plan, your own spreadsheet, all that kind of stuff. So as always, go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.